I was going to do this video tonight and then release it later on in the week, but in the interest of the Fed meeting tomorrow afternoon, I'm not sure what time, probably around 2:30. In the interest of that, I decided to go ahead and release this tonight. So, what I want to talk about is the dollar currency, the US dollar currency index, and the Fed, and just give a little bit of information, just some basics about things to watch out for in some possible scenarios, both from a fundamental and a technical perspective. But before we get into the content, thank you for being here, especially my return viewers. Please like, share, subscribe, um, leave a comment. Let me know what you think. Also, let me know what you think about, interest rates and things like that. I could possibly learn some things from those of you that view my channel and watch my videos, I mean. But yeah, so we're going to talk about the U.S. dollar currency index and the Fed uh, in um, in anticipation of this meeting tomorrow. And I may throw a little bit in there about what I may be watching for in the broader markets. But let's go ahead and get into it. All right, so I've never done a breakdown, a top-down analysis of the U.S. dollar currency index. The ticker is DXY. I'm not sure where you can trade this at. I'm gonna check my Thinkorswim app and see if I can pull it up. But I don't think there's like a currency pair. Um, oh yeah, you can trade this in Thinkorswim. Yeah, futures and stuff. So that's looks like that's where it is. But anyway, so I'm gonna start out with a breakdown, a technical breakdown of the U.S. dollar currency index, so DXY. This is the monthly chart, and you can see I did. Uh, this is a view of all the price action on this ticker for all time on a month-to-month basis, and it looks like the all-time high for this one is 164.72, and it's currently sitting down at 103 and some change. Um, what I'm seeing here on the monthly chart is that it's been kind of ranging between about 89, 90 up into about where it is right now. So possible, um, there are a couple of possible scenarios that I'm looking at, just given the price action on the recent price action on this monthly chart. So a breakout of this range, which will require the price to hold above pretty much where it is right now. Well, really around like 101, 102, would send the price probably toward 120, so maybe around 115 to 120, possibly. And remember, this is a monthly chart, so this isn't necessarily something that I would be expecting to happen in the next month or so. You know what I'm saying? So definitely would have to give it some time. Um, so yeah, that's one possible scenario. So that would be a level that a price level that I would be looking for. And so I'm just gonna well, I'll just do another rectangle. Um, Matter of fact, I'll just kind of duplicate this one or clone it. All right. All right. So that gives me my target range as it breaks and holds this current range that it's breaking out from. So nice, gave a bullish signal down here in the low 90s range, and it's been running for months now. And of course, we know this is the case because interest rates. So as interest rates go up for a currency, the value of that currency goes up, but that's not always a good thing, and I'll kind of touch on that if I remember to. But that's just something to keep in mind. You know what I'm saying? So that's one possible scenario. And of course, if it does not hold this 101 or this low 100s area, I could see it coming back down toward like the mid 90s or maybe even lower as a possibility. And so this would be one to watch for sure as the Fed, as Jerome Powell talks tomorrow, just to see what happens. And I think the markets are kind of pricing in a interest rate hike, but we don't know how much. We don't know if it's going to be 25, 50 basis points or 75 basis points. No idea. But those numbers are significant in that, in my opinion, the markets have priced in a 25 basis point rate hike. So I think that anything beyond 50 basis points, the markets are not going to handle that very well. That's just my opinion. I could be wrong. Um, but yeah, we know that interest rates are going up. That's not new news. So now it comes down to the nuances of how much. That's the part that remains unknown right now. So um, another possibility that I'm looking at with uh, DXY is this one's a bullish possibility as well. But of course, I still like to be as non-biased as possible. But as far as the monthly chart is concerned, it's definitely leaning in favor of the bulls right now. So this particular ticker is anticipating that interest rates are going to keep going up, and we know this from a fundamental perspective. Like I said, we just don't know, how much. As you can see, um, DXY hasn't hit 120 since, what is this? November of, geez, around 2002. So it's been a very long time since DXY has been really where it is now, and also where it could be headed to. So that target area that I mentioned, it's been 20 years. So that's pretty significant. But yeah, so a breakout there. We can see the price going much higher than this 115 to 120 range. I would say, what's that, about 74 to, let's see, probably over 125 possible. So long term, as far as the monthly chart is concerned, and I would say, maybe over the next maybe over the next several months, like maybe 18 plus months, this thing could be sitting at 115 plus. I'm not sure how volatile this is. I'd have to look and see what the ATR is on this one, but that's why I'm kind of giving it more time, because I'm just gonna err on the side of caution and say that it's not super volatile. But yeah, so 18 plus months or so, this thing could be sitting at 115 or more. Let's take a look at the weekly chart. All right, so weekly chart is looking much the same as the daily chart, not daily, but the monthly chart. We have the possibility of a little cup and handle breakout type situation here on the weekly chart, which would have this price going shorter term. Let's see. So about 110 or so on a weekly basis. And I would say I would give that a shorter time frame than what my hypothesis is for the monthly chart. So I would say within a year, this could be sitting at 110 or so. And this is just based on the weekly chart. But again, this stuff doesn't come into play until it holds above this 101, 102 area. So there's a possibility that it could pull back. I'm just open to anything when it comes to the markets, and you really have to be. You can't. You got to be flexible, because you're dealing with humans. You're dealing with machines too, but you're mainly dealing with human psychology. So you have to be. It's real fickle. So you have to kind of be flexible about that. But let's take a look at the daily chart. The weekly chart is definitely showing that the price is breaking out of this range, but it's still not out of that supply zone yet. I think that once it gets over 104 and a half probably, and is able to hold above that, then this area becomes the new floor. But let's take a look at the daily chart. Daily chart is looking pretty similar to that weekly chart. We got that nice rounded bottom situation here. It could come back and retest this low 100s area. That's something to look out for. And I'm going to try to watch this one more often than I do. Shout out to Russell, the crypto archangel, who told me to take a look at this one, and I decided to do a video on it as soon as I looked at it, especially given the fact that we're going into FOMC minutes tomorrow. But anyway, right now all signs are pointing bullish to me for the most part, but I think it is a little overextended right now. It could use a little rest period, and I think that if JP comes back with something less than 50 basis points for the interest rate hike, then this thing is probably going to come down, or it might just kind of consolidate. But that would be a great piece of news that could support a retest of the breakout area down here in the 98 to 101 area short term. So I'm gonna try to have this chart up all day tomorrow and just kind of watch it on an intraday basis to see how it performs the day of and leading into and the minutes after FOMC, because I've never done that before. If you have, leave a comment and tell me what you've observed from watching this, because I don't really trade currencies or anything like that right now. It's mostly crypto and options and stocks. But yeah, so that's my thought process as far as this one is concerned. Long term, I'm seeing this one at 115 plus. More shorter term, I'm seeing it at inside 105 to 110. Maybe even working its way up toward 115 within the year or so. But that has to be supported by, continued raising of interest rates and things like that. Anything that supports a strengthening of the U.S. dollar. But to get into some things to think about as we go into tomorrow's session, and this is just my opinion, of course. I'm thinking, kind of worst case scenarios, quote unquote, as to, what can Jerome Powell say that could cause a lot of volatility in the markets. And one thing that I keep coming back to is if they say that they're going to completely end bond purchasing. Right now, they're raising rates and they're still buying bonds. So it's kind of dumb when you think about it. It's really kind of dumb. But I'm not going to get into that. But it just do a little research on that, and it just doesn't really make sense for if you're trying to curb inflation and you're still flooding the markets with that currency. But anyway, so that's something that if Jerome Powell were to say tomorrow that we're going to stop bond purchasing, I think the markets will dive. I think SPX will go below 4K. SPY will go below 400. Um, Fast, quick, fast, in a hurry. So it could happen in a day. It could happen in a little more than a day. But yeah, so, and I already hinted at any interest rate raise beyond 50 basis points, I think will cause a bearish reaction in the markets. Like I said, I think 25 is priced in. It's been priced in. But I think if he comes back and says on the flip side, we're going to raise it by 25 basis points, the markets would either kind of stall or maybe be slightly bullish, possibly. And then another thing to watch for is bond selling. So now a buzzword that I'm sure the Fed and talking heads will try not to use is quantitative tightening. And so basically, to make a long story short, this is when the Fed starts to sell the bonds that it purchased in exchange for the US dollar. So that makes tightens the supply of that currency. So just a quick little thing about bond selling. But the thing about bond selling, and this is something that it would behoove you to pay attention to now and forever, is bond selling around the globe. Just recently, they've started talking about Japan interested in selling bonds or maybe starting to sell U.S. bonds. And a lot of people don't realize that Japan is the top holder of U.S. bonds, trillions of dollars in U.S. bonds. And if they were to sell their bonds, that would flood the global markets with U.S. dollars. And we know that drives down the value of that currency. And so DXY would react negatively to that. I think the overall markets would react negatively to that. So that's just something to keep in mind. Interest rate impacts on import and exports. So if you look at the data, especially with the trade balance between the U.S. and other major nations, China being one of them, you will see that the balance of trade is tipped out of the U.S.'s favor. And the con to a strengthening U.S. dollar is that it becomes more business sound. It becomes cheaper to rely on imports because the U.S. dollar being too strong costs more in-house. You know what I'm saying? So if it's going to cost me more to do it myself, then I'm likely going to want to outsource if it's going to save me more on the expense side. So it just makes business sense. It's unfortunate, but it just makes sense from a business perspective. So that's something to think about. Another thing about a strengthening U.S. dollar is that people tend to travel to countries where they get more bang for their buck. So that's just a little tidbit that I would suggest that you guys do your own research on that. I've talked about that briefly with my people several times. That hey, watch the tourist industry. And I think that the tourism industry would benefit greatly from a strong dollar, because if I can take $20 and it's 10x in another country, then I can, have a great vacation elsewhere. So that's something to think about and consider. I'm trying to think if there's anything else that I wanted to say about that. Again, I think JP will be talking tomorrow around 2. I'll be tuned in to see what he has to say, and I'll have my charts up as always, just monitoring the sentiment, the price action in real time. It's a joy to me. So all my chart people out there, I'm pretty sure you'll be doing the same thing. But be careful out there. I hope you guys enjoyed this video and took a little bit from it. But I appreciate you guys watching, and I'll catch you in the next one. Thanks.